On, there's another mid-cap company, which is Anup Engineering, the Arvind Group company, where we understand mid-cap funds have been nibbling in. PGIM was one company, one mutual fund, which has bought some stake there. So we thought of getting you a management to understand what's happening there. And Rishi is joining us on the show to talk more about that. Rishi, thanks very much for your time. Now, first quarter numbers also, if we start with them, are pretty strong, but people are thinking on the street, how good are these numbers in terms of quality of sustainable growth from here on? So if you could talk about how's the visibility in business from here on?
This quarter was, it was a very, very challenging quarter for us. And not just for us, it is for the, industry and society at large, because of the second wave being at the peak and hitting us when none of us really expected that to hit us. So it did affect our operations in a major way. It contracted maybe about 40% to 50% of the normal levels. But the heartening thing is that despite these challenges, we were able to grow the revenue by about 72% YOY basis. And we had about almost 55% increase in our PAT. So keeping the COVID second wave in the background, it was a remarkable performance. And it was made possible because of the fact that we were a little better prepared than where we were at the end of Q3, in the middle of Q3 last year, when it really hit us badly. And going forward, if you look at the market, the demand is continuing to be strong. It's a very exciting time for a company like us, because there is a significant uptick in the capex market, the capex cycle of companies in all sectors, be it the traditional sectors like refining, as far as we are concerned, or if you look at metals and mining, you look at chemicals, pharmaceuticals. And we are anticipating even the fertilizer sector to take off in a big way in the coming months.
Well, Rishi, surely you are talking about very improved times for capital goods sector. All the sectors are seeing good growth, as you just said. Talk to us about what kind of messaging are you giving out to the investor community? I recently see from America, PGIM fund picked up some stake from the open market in terms of blocks, but when you're interacting with your investor friends, shareholders, institutional ones, what is the messaging and what are they asking you basically?
So I believe that, fundamentally the business is a strong business. It is, the foundation is pretty strong. If you look at, we are the, leaders in the market that we are in. In the segments that we are in, we are the leaders. And there is a very clear space available for us. I think the biggest thing that I would like to share is that there is a clear runway to growth. We are in a good space. We are looking at a scenario where our capabilities are versatile. We are able to address and service various sectors for their respective capital goods requirements. We are strong on those capabilities. Whether it is engineering, whether it is design, whether it is process engineering, project management. So we have got a strong track record behind us. And there is even if you look at our margins, they are industry leading. Our EBITDAs are sustaining at about 25-26%. And going forward, we are looking, all set to kind of stay within this range of maybe 24 to 26% on EBITDA. So this is a growing business with a clear runway ahead of it. And I believe that the business is good, and there's automatically the interest from the market is something that will follow.
Right. Rishi, talk to us about slightly longer term, next 2 to 3 year outlook. How is the visibility looking? And what are the targets you've set for yourself internally?
I can tell you about FY22. It is going to be better than last year. We did about 300 crore in the last financial year, and this year is going to be better than that. But if you were to look at a longer horizon of maybe 4 or 5 years, we are on track to achieve our target of 1,000 crore business purely from manufacturing process equipment. And the key drivers again center towards building capacity, adding capacity, which we are doing. I think we are our capex in Odhav, the existing location where we are, is in its final leg, and it is due to be commissioned by the end of this quarter. And our new plant, state-of-the-art facility for fabrication of process equipment, is coming up in Hera. The planning, regulatory approvals are all now behind us. We're now focused to get it off the ground, the construction work, the actual work on the ground, to get it started by the end of this quarter. So that's how it is, and that's going to form the backbone of the growth in future. Market, I don't see for a company like us, for a company with skills and capabilities like us, is going to be a constraint.
Right, Rishi, lastly, just to understand, what are the profitability levers which you have the room to press and improve your margins? What's the outlook on margins?
As far as the margins are concerned, we are quite confident that we will be able to sustain the margins that we've demonstrated so far. We have been in the range of about 25-26% of EBITDA. This year, we are expecting it to be like in the range of about 24-26%, because of the fact that we are in an exceptional time where the steel prices have really behaved very, very erratically, and they have gone very high. And this is an exceptional rise, something that we have never witnessed as steel users in the last 12 years.
All right, Rishi, we'll let you go on that one. That was Anup Engineering. Very bullish commentary coming in from Rishi Kapoor, the CEO of Anup Engineering, on the road ahead. But before